Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, July 7th, 2022. It is 11:24 a.m. Eastern Time as I'm starting the video, and we're going to cover the broad markets. Time permitting, I'll touch on a few of the other things that I mentioned recently, some commodities and other things. But let's just focus first on the broad market. If there's time at the end of the video, if I can get it in there pretty quick, I'll cover a few other things. I do have to cut out here this afternoon for a couple hours today, at least a couple hours, probably 3 or 4. May be back before the close. It's going to be really tight. If I am, I'll try to post an update, some charts, my thoughts. But look, right now, nothing's changed. This today only gives me another check mark. In fact, yesterday was that questionable check mark call because we parked on the downtrend line, although it was a green day. But today we have a breakout, so that's a check mark right there. Here, let me zoom in. So a little check mark for the bullish case, which I continue to maintain as of now. Breakout candle. Obviously, if it can get a daily close, especially a solid daily close, in other words, about where we are. We're at 292.74 right now, comfortably above the trend line. And for a breakout, as I like to say, the greener the better. So let's see if we can build on today's gains. All right, I'll get down to the short-term charts in a second. But this is the daily. Again, there's our primary downtrend line on QQQ, or at least the intermediate term downtrend line, and that gives us that wedge pattern. And so this is a breakout, and as such, I favor more. This is on the daily chart. If you're swinging it, you've got a resistance slash first target zone right here from about, call it about 300 to 330. Give or take. The bottom right there is at 299.68. It's the bottom of this gap, all the way up to about 300. And if hit, that should, from where we're at now, carry us another 3% or so. And we could come in and back test here. So if we fall back today, again, let's just see if we can get a daily close above here today, and that will give me an additional check mark by the close. There's some divergences on the short-term chart that could give us a little pullback right now. I'll get to those in 1 second. Before I do, let me give you the SPY chart on the daily chart. SPY is just stepping up, stepping up lately, but so far so good. We still, just like QQQ, we still need to take out those previous highs. So, although I've maintained that near to intermediate term bullish bias for the last 3 weeks now, it's still a very cautious one because we are in a bear market and must recognize that. And as such, let's see if we can build on these gains and take out, let's, number one, see if the breakout and the Qs stick today, and then build on the gains and take out those previous highs. Targets on SPY, you can see here we have a level of about 397 likely to come into play. A potential downtrend line. I call it potential. It's not really confirmed. We only have 2 reactions. But if we get up there, and it also comes in right at the bottom of this trading range. That's a big level right there. I'm going to put a line there for you as well. And that's probably, if we get up there, where we'll get a decent reaction, about 406. And depending on if and when we get there, could come in with in line with that downtrend line there. So it'd be double resistance. And so, in other words, the way I look at that, that's an intermediate term or near-term swing target, about 4.75% upside from where we're at right now, almost 5% on, about 5% we'll call it on SPY. And so that's that. Unless I see something such as a clear failure of today's breakout in the Qs or anything else, I continue to maintain my long positioning and near-term bullish bias. The SPY 60-minute chart here. There's our downtrend line, short-term, minor downtrend line broke out. We also, this level here to me was big, 381.83. We had a previous reaction low. We broke that low, and now we recovered it. And so that means this was, as of now, a bear trap, aka false breakdown. Probably sucked in quite a bit of short interest. That put the S&P 500 a new 52-week low, and there's where, it's when I pivoted a few weeks ago. And again, so far so good, but we need to take out this level right here, and that is about 393. That's our previous high. You got a gap right there. You got another gap above it. So plenty of work to be done, and let's just take it one day at a time. See where we go from here. As of now, if we get a pullback today, intraday, I'd really like to see 381.80 hold on SPY, ideally, and then on QQQ 60-minute chart. I've been going off this board right here. Any pullback, ideally, not absolutely necessarily, but ideally should be contained by a back test of this trend line and/or that 285 level. That was a big level to me, comparable to level I just showed you on SPY. There was our breakdown. We all see what we want to see. Those that wanted to short it saw a break, new 52-week lows, but I saw a bullish falling wedge with positive divergence, and so far that has played out and continues to play out for an uptrend. So we just need a little more work to the upside, pop and take out these previous reaction highs, and as well as that 294.60 resistance right there, and that should open the door to these next targets here. Big level still remains, just like on SPY, the bottom of this trading range right here. And there's other reactions. That's about 305, so that's an intermediate term target. But remember, if that target is hit, whether we pull back first or not, that's going to take out that previous high and just help firm up the case for a near-term uptrend. And again, I cannot impress this enough. Most importantly, what I'm not covering in all of these videos, let's not forget we're coming off big positive divergence on the daily chart as well, which that's what gives me these potential, what I call swing targets here, longer term bear market rally targets, which could take us all the way back up to the 200-day moving averages, exponential in red there, simple in blue, plus a downtrend line right there. And that would be, I think, what was I keep talking about 20+% off the recent lows. And then at that point, depending on how the charts look, I'll most likely be looking to close out any swing long positions and/or reverse back short into swing or trend short positions. As of now, looking good. Let me go down to the very short-term charts here, 5-minute charts. This is what QQQ looks like on the 5-minute chart. We've got some divergences forming here, a little wedge pattern there, and that could take us back to that wedge, and if we break down, that could be the catalyst for that pullback. So here's a big old gap right here, and there's also a reaction high there, and so that would be a pullback target, about 287 if hit. Again, this is the realm of the very active trader. Right now, the longer term, the daily and 60-minute charts are constructive. So if you're not a nimble trader, probably just sit tight, with a little bit wider stops and let it run. Again, if you share my views, assuming you're long, and if you're not, I give you the same overhead resistance levels that I'm talking about as targets, or levels that I'm looking to get taken out, broken above, to trigger the next buy signal or objective, long entry add-ons. Those can be the levels that someone who's bearish, wanting to fade this rally, could short into. So take it. Resistance is resistance, and right now I'm looking for resistance levels to be broken out to trigger the next wave of buying, whereas again a bear could be looking to short into those resistance levels. Or example, this little bearish rising wedge, you might get an active trader could game a quick pullback. The wedge target's the widest part of the wedge, the measured target added to where it breaks down, so that would bring us roughly to that level there. Or if not, you have another gap, the bottom of the gap, and price support just below it. So let me just be very clear. That would be if that wedge breaks down and we get a little selling. My max pullback target zone, and that's about 287.50 down to about 285.30, would represent a pullback of anywhere of 1.6 down to about 2.42%, providing objective add-ons. Now, we may not get there. If you do, those are objective levels to add to, but maybe not below that. And if you are long, again, it's up to you. If you're long, really where you're going, how much you're holding out for. If you're comfortable with a 3% stop, that should do the trick, especially if you reversed in the last couple of weeks and there were numerous little sell signals and objective levels to add on along the way. And right now, here's the low right there from 3 weeks ago. So we're still up 9%. I'll take that all day long, and hopefully we build on that those 9% gains. And for your NQ traders, I still favor the NASDAQ 100 is my preferred index to trade right now, and that's because it has a heavy concentration in both tech and the market-leading FANG stocks, everybody's favorites that are beat down. So if we get a rally, that's where you're going to see institutions and individuals coming in and buying up those names. This is a 60-minute chart of NQ Nasdaq 100. This was a trend line I've been watching for a while. Pretty powerful stuff, I think. A lot of reactions on this trend line, and you zoom in nice and tight, and you can see that we've now clearly taken it out. This is what I talk about a solid breakout, impulsive. See this big green candle? That's the biggest green candle in a while right there. That's our breakout candle, and these are the two follow-through candles. That was a candle printed at 9 a.m. this morning. So that doesn't guarantee the breakout will stick, but it substantially increases the odds. Breakouts that occur, on an impulsive move, increasing volume, things like that have a much higher chance of sticking. So that's it. Let's not overthink it. If we pull back and backtest, sure, that would be an objective level to add. You can even add that trend line that's going to come in line with the QQQ trend line. Maybe we get that, but maybe not, because I think this market has a lot of trapped shorts. They're going to start to feel the pain now and are wondering why we keep going up now for 3 weeks and we're making higher highs here, and so they are likely to get squeezed out or continue to get squeezed out. But again, so we either get it or we don't. We're talking a very small pullback, anyways. It's not. We're only talking on that about 1% to backtest that trend line and come in there. So that's it. Oh yeah, let's talk sectors. What's up today? So in the S&P 500, it consists of 11 sectors. The biggest gainer by far is XLE, which is the trade idea I threw out yesterday. Our second target was hit, so if you took that trade, you're up just without using leverage. You're up 7.5%. If you went with ERY. No, that's the it's what's the other one? X. Yeah, the two-time bull. Of course, that's up 8.25% today. And you've got there's a ton of them out there. You have DRIP or Gush. That's what it is. Gush is the two-time exploration and production ETF. That's up 11.6%. So again, any or all of those. Oh, and of course, crude oil. Let's not forget that. I'll give you an update there today. Crude oil is on the 60-minute chart right here. Nice tag of that 95.29 level, which was good support there. Bunch of reactions along there, and you had nice positive divergence, and then boom, we're right at that trend line. So that is still offering an objective short entry. I gave you a little line there. That was where I could see it comes in right above. So I think this is a very objective short trade right now. It was just like an objective long. There was a 9% bounce up to that level. And you can game a pullback. I just set a stop there and let it run. There might be more downside in crude. I know not all of you trade futures, so that's why I gave you yesterday all the energy sector ETFs. I said any or all of those are likely to bounce with crude. But here's USO, the crude oil ETN. And so you had this trend line here, right? You had, first of all, a big divergent high. Then the minor trend line break. We shorted that, went down, hit the trend line. That's where the CL fourth target on that swing trade, that was a monster short. We pretty much, nailed that and got out, and it bounced, and then it went down, but it took out this trend line. So you can see we're not all the way back to the trend line, but close. And we're also, I'm going to put a line right here. See that previous reaction low? So traders are going to be looking at that. So it's more of a scale in or a hard short here, whatever you want, down to, I think, one more leg down. I see a continued abatement. I think I'm playing a bounce. I told you, yesterday, corn, wheat, trading some of the ag commodities. But this is my whole thesis, if you will, for a rally in the stock market. See, this has already happened. And people are going to start to realize there's this quick, swoon down. The Fed didn't even talk about it in their minutes because that's kind of dated from the last meeting. But this is where I think the smart money on Wall Street, I like to think they're thinking like I am, that this is going to allow the Fed to back off a bit. Now, this rally today, sure, that doesn't help. But if we get rejected here and we do get another leg down, as I think we will here in crude, especially crude and nat gas, those are your energy ETFs, then that will certainly help the Fed be a little easier going forward, a little less hawkish. And there's UNG. That was also another monster short trade down. Target was a trend line. We hit that, got a bounce as expected. And then boom, we broke it, and now look, we're coming up, and we're about to back test it from below, and so that is resistance, and so natural gas is up big today. It also was a nice, we had a nice setup in that yesterday. Let me show you that trade. That's 3-hour chart, 2-hour, yeah, hourly candles. Positive divergence on one of my go-to swing trading time frame, 60-minute charts. There it is, a little breakout above that today, impulsive, but you got some pretty big resistance coming up here, and so this one will probably get checked along around that level. So again, maybe a little more upside in nat gas, maybe not. Crude oil is pretty also coming up to resistance, and if we can get these rallies to run their course soon and have these guys take another leg down, that should be I think a big boon for the stock market. But well, right now, trade everything on its own charts. Everything's kind of topsy-turvy ever since the Fed's had such a heavy hand in the market since COVID first hit. And like I said, whether it comes to Treasury bonds, gold, natural gas, trade them all on their own technicals, and give a little bit of a grain of salt to historical correlations, which in many cases have been completely and utterly disconnected with all the market manipulation in recent years. Oh, one more. All right. So as of now, we've had, I've had additional check marks on my bullish case, and still think there's plenty of meat left on the bone to be long. And as I've been saying, if I am right, then that is going to carry over quite likely to Bitcoin, which has become highly correlated really since the bear market began back around, when both Bitcoin and the NASDAQ 100, which is the king of risk on indexes, both topping back in November, Bitcoin and the NASDAQ, and so both falling and both just recently bottoming, and so there's a very good positive correlation. So, while, like I said, disregard or put a grain of salt with historical correlations, because there were times where Bitcoin was trading against the market because it was considered a proxy, or I'm sorry, a safe haven or alternative. But lately, because it's been a risk on assets, been trading in line. So with that being said, if the stock markets continue to rally, then Bitcoin should go up and hit this target I've given you. That's a pretty aggressive target, but not for Bitcoin. You might think it's aggressive, but it's run-of-the-mill for Bitcoin the way it trades. You don't trade Bitcoin for 5% swing trades. Bitcoin moves 5% plus in a day easily. You trade it for double-digit gains, or at least I do on the long or short side. So bottom line is, okay, we took out this trend line recently. First of all, let me back up. We put in a divergent low right here, and just like the stock market, it's been stair-stepping higher. Today it took out this 2753 resistance, which if I zoom in nice and tight, you can see it was short-term resistance. You have these reaction highs right here and here. Most important, you can go back in time and see some other reactions on that level, but most recent reactions for me always carry the highest weighting, and so boom, popped it out on an impulsive breakout. There's a potential downtrend line. I'm not putting a huge weighting on it, but this is a big level, so hopefully this holds. Even a little pullback slightly below there to scare out the weak-ended longs that took the breakouts, fine with me. So as of now, I like Bitcoin because the stock market is continuing to give me check marks. For those of you that don't trade the futures, that's GBTC, and let me just back up before I get off GBTC, and again share my target zone, which is 27,500, we'll call it the bottom of that target zone. There's a big gap there, the top of it being 2874, but I'm also really looking at this trend line. That's on a very significant trend line, I believe. And remember, trend lines are dynamic. They come in at lower and lower levels every day if it's a downtrend line. So we're going to hit that first. That's all but a guarantee right now. We'd have to rocket straight up to hit them both. So we'll watch that. But either way, just, I've already done this many times lately. I'm trying to just give you a rough estimate from where we're at now. Need to pull this line down a little bit there. Call it still about 30%, 31% upside to that target in Bitcoin. So Bitcoin could scream here soon. There's GBTC, busy chart, just has all the previous trades. Back here we were slaying this thing, highs and lows, long and short trades, covering at the lows, reversing long, shorting, covering the lows. Traded that with near impunity back here. went long here. Thought we had a chance to bounce, but we broke that. But that doesn't shake me off it. Nobody bats 1,000 this time around. Now we have positive divergence once again, and I just showed you the case on that Bitcoin futures chart, and there's that big old gap. See, there's really nothing between here. You got a massive gap right there. Obviously, traders are going to look at the bottom of the gap, and I think it'll be probably a little check there, but I think there's a good chance that, again, contingent on the stock market rallying over the next few weeks to months, then Bitcoin has a good chance. So GBTC, if you don't trade futures, is your one of your vehicles. It's the first to market ETF type instruments. Technically not an ETF. It can trade at a premier discount to the price of Bitcoin. But that's about, you're talking about a 39-40% run up if it gets there. So also keep an eye on the futures. I'll continue to update this. There's also potential downtrend line that's all the way up here. We could hit that, and that'd be almost a 60% rally, depending if and when it gets there. So I look at everything risk reward. You may not believe in Bitcoin. I don't believe in it. I don't fully understand it. I don't care. I could give two flips. If I can chart it, I trade it. That's what I say. And so, Bitcoin's not something I'm going to get married to. I'm not going to, lock a portion of my net worth away in that and throw away the key like a lot of crypto fans have done. But again, it's just a trading proxy, so I'm trading option or vehicle. And then, oh, by the way, MBT, if you trade futures but you don't like BRR because the leverage requirements, it is a futures contract, so it's leverage, and you put up $1 and they give you a lot more. But the margin requirements are pretty heavy on that because it's so volatile. Most brokers are it's a capital burner is what I'm trying to say. If you trade on margin, you know what I'm talking about. So MBT is a smaller micro Bitcoin futures contract, and then you have ETHE, Ethereum, which will rally almost certainly in line with it. And same story. I don't have this chart all marked up, but there's a big old gap right there and a primary trend line to be back tested. And so when you look at it this way, you've got this little recent trading range, little W bottom if you zoom in nice and tight. W bottoming pattern right there. Tops right there, pop that, run up for a back test of the trend line, or backfill this gap right here, and you're talking about another 24% in ETHE or ETCG. Same story there. Also, PPO is turning up, about to make a bullish crossover. I'd probably tweak this trend line like that right now, and also look at this gap here. Let me give you a level right there, near-term target. About 703. Okay, that's about it. I'll wrap it up here with ZB for those of you trading the long bond, 30-year Treasury bond. That was big resistance here. I mentioned that the other day. Objective shorting up there. Negative divergence right here. Divergence building. And rejected, but we're coming up on the good support right there. This is a nice support zone, 139.045. Probably get a bounce there, and then maybe just stand aside for a while. Remember, this also Treasuries down because the market's rallying. Treasuries are a risk-on, risk-off asset. When the market is selling off, people typically buy Treasuries, and then when the market rallies, the institutions primarily they start selling Treasuries. So. That is that. Let me wrap it up here. And again, right now everything looks good. Minor pullbacks withstanding, no big deal as long as it doesn't violate the levels I gave you earlier. I think things look good. It's right now I think it's safe to be in the water. And of course, if we take out the previous highs in the S&P and NASDAQ 100, it's probably going to bring in the next wave of buyers, regular natural long side buyers, and squeeze out some more shorts who tend to place their stops right above those pivot highs. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.